So the markets this week have really tentatively pushed higher. On Monday, we saw somewhat of a bullish pop, which came as a big surprise. On Tuesday, we have what we call a shooting star candlestick, indicating that there is selling pressure right around this horizontal resistance level. On Wednesday, we have what we call a high wave spinning top, and today was really a non-eventful type of candlestick, even though we were up a little over 50 points on the Dow Jones Industrial Average. What I want you to do, as at this Thursday afternoon market recap, is really pay attention to this downward resistance trend line. You can see it's acted as resistance twice during the period of March, almost the third time most recently. Going back about 2 weeks ago, we are rallying back into this level, and this is the perfect opportunity for the market to roll over if in fact it is going to do that. We came into the week quite bearish. We came into the week on this particular candlestick, and we really referenced those non-farm payrolls which were released Friday week in the past. Since then, it has acted somewhat surprisingly. The overall trade setups haven't really changed all too much. There are a couple of stocks which I will include in this afternoon's market recap and stock update, which I will bring to your attention because they are making, somewhat of bullish moves at the moment. But given what the market is doing, given that we are at not only a horizontal resistance level, but also this descending trend line, I'm so cautious to really trade on the bullish direction. At the moment, as I stand here, or sit here doing this recording as at Thursday afternoon, I have 0 positions open. That includes even the long trade setups which we spoke about over the weekend. The reason why is because truly my conviction is to the downside on these markets. And when you have a hunch or when you have an inclination that something just doesn't feel right, I am going to reference the US dollar and a couple of comparisons going back in time also in this video. Even if a good trade setup is presenting itself, but it's really, set up in the wrong direction or in the opposite direction to where you feel the market should be trading in the direction which it could move that week, it's always okay to let that trade opportunity pass and re-enter at a better opportunity in the future. So I've referenced really this downward trend line that we are still yet to overcome on the Dow Jones Industrial Average. I've referenced again this horizontal resistance level, the slowdown of these candlesticks over the past 3 trading sessions. The only thing which we don't have at the moment is the actual rollover. If we start to see engulfing candlestick patterns or one black crow candlestick types of settings show up, even starting or beginning on Friday, it's really going to again usher in that continued movement into the apex of this descending type of triangle. I'll give you more and update you further over the weekend. The same is true for the S&P 500. I don't really want to elaborate much further on the types of market moves which we're seeing on this particular market. What I'd much prefer to do is just get into some of the actual stocks which we follow here at Pivot Point Trading. The reason why is because again, we came into the week with somewhat of a bearish outlook on the, of course, opportunity that the market reverses, it rolls over, and it confirms below the figures and the areas on the chart which we spoke about. That hasn't been the case. Now, when we have a look at these individual stocks, Apple hasn't done a whole lot. You can see right here that we're sort of getting stuck in some form of a symmetrical triangle. It looks like we haven't seen the apex break. This is something which I'll speak about over the weekend in this weekend's pro analysis class, because we are also setting up some form of a Bollinger Band squeeze, a really nice trade setup on Apple. Also, what I can do is speak about Amazon right now, because it has had some form of bullish pop. It is triggered, it is profitable, it is up over $1 on our bullish entry. Our bullish entry came in here about 382, just above that level. We are breaking out, and it looks as if we are going to come back up and retest this old resistance level going back to late February and the beginning of March 2015. This is a trade which I am not in. Again, it didn't agree with my overall market structure, the way which I analyzed the market and thought and believed and truly expected the market to behave this week. Again, it's really hard to forecast time and the way these market moves occur. You can see them occurring, but between the analysis and when it does occur, it can move against you, even though if you're not in positions, but it can again give you these sort of weird types of bounces when everything is set up to move in one direction. So Amazon is one of those stocks at the moment. If you are in the trade, good for you. It's profitable. You've made a little bit of money. Set your stop accordingly. Just pay attention that you do have a very tight type of target on this potential stock trade. I'd be more so looking for the breakout above 386 in the event that it does occur. Boeing Airlines this week, again, another one of those stocks which is really dancing around that type of bullish entry which we had to sort of put on the chart, but another stock which I just truly wasn't convinced on. It was more so the bearish breakdown below 144. That hasn't occurred. It's looking weak at the moment. We've got 3 candlesticks occurring at the same location at some form of a swing high, and really an area where we're making consistent lower highs. You can see that the trend is starting to roll over. So pay attention to Boeing Airlines, obviously, if you are in it. Set a stop as well. I'd probably put it below today's candlestick and just monitor the price action, monitor what the overall markets do, because they are going to give you, a better indication of what to expect moving forward. Here's the chart of Baidu. Now, Baidu and Tesla are two stocks which have made bullish moves this week. Both have been against the trend direction. You can see that the trend direction on Baidu is actually down. We've got a bearish trend in effect. We're making a series of lower highs and lower lows, but most recently on the back of the Shanghai Composite Index in China and also the Hong Kong Index really rallying and lifting off. You can see that it's really influenced the price of Baidu. Baidu has taken off like a rocket. Here we were on Tuesday at that support level, which I referenced in the pro class, at about $200 a share. Here we are at $220. It's appreciated in value at least 15% since Tuesday. A very quick move for Baidu. What I'd say for this particular stock is to let it come back down. The same is true for Netflix. To come back down, to retest this level, for Tesla, and then get in at this particular moment in time. It's going to be a Google type trade, which we had set up about a month ago now, where we saw the double bottom. We saw the breakout, the retest, and then you see it take off again like a rocket on the second shot higher. That's the best way to trade Baidu. I will break that down for you again over the weekend, but this type of move right here is unsustainable, and you will expect and you will see a pullback just like we did in the price of Facebook, which is going to give us a better buying opportunity. Moving into Tesla, because this is the other stock, a very similar type of move. You have some form of a double bottom right here at that support level, which we have been referencing for a very long time now. This came as, again, somewhat of a surprise. 4 days of price action. It's really taken off. It's really, again, going against the downward trend. You can see, obviously, we've been in a very, very bearish downward trend. Lower highs, lower lows. We've bottomed out at support. A lot of bullish divergence types of signals, but pay attention to the level here at $200 a share. You'll generally see, let me just change my color. You'll see the breakout, the pullback, the Google type trade most recently, and then you get the acceleration to the upside. That is all, of course, contingent on the overall markets. Tesla's not going to break higher. If in fact the Dow Jones doesn't break higher, the Nasdaq and the S&P don't support the move. You're going to need broad market strength to get these stocks to reverse these bearish trends. This could just be some form of an intermediate pop, which is going to fizzle out below these most recent intermediate swing highs. So always pay attention to that. You need better signals. Don't get involved in these stocks at these overextended levels. You're setting yourself up for the quite realistic possibility that you will hold during a retracement, which is not what you want to do as a swing trader. You'd rather get in at the right opportunity when the swing is in its infancy and it's starting to take off in the direction which you prescribe it to, of course, be moving or transacting in, momentum moving in. Netflix, again, has had a bullish pop this week. Moving into earnings, I think earnings is Wednesday next week. I think it is the 20th. Let me have a look here. Sorry, the 15th of April is going to be Netflix's earnings. Until then, I'd probably sit tight on Netflix. I wouldn't really get too involved in this particular stock. It's pretty wild. Again, it's making these types of really big oscillations, but really going nowhere for the past 3 weeks. We're being stuck between 440 and really 415 or so. And at the moment, it's not really a good idea to be setting up, breakout triggers on Netflix when the markets are at these resistance levels. It's really, really risky type of thing to be doing. So sit tight at least for Friday's trading session. I'll give you some more clarification on the price of Netflix over the weekend in that pro analysis class. The same is true for IBM. Look at this. I mean, we referenced this particular candlestick last week. In pro, we have seen a bullish bounce. We have a shooting star, high wave spinning top, and another bearish candlestick on Friday. The overall net movement from here to here is minimal. We've got 162 and we opened the week at 160. So we've really made $2 on 160 stock on IBM. We've gone absolutely nowhere. It really looks like we're moving into a descending type of really small type of wedge or triangle, something like that, something which is untradeable until you get the range breakout. Again, I'll keep you updated in that stock also. Goldman Sachs, surprisingly trying to push back up into the highs back in December and January 2015, about $196 a share. We're not there yet. We were up $2.30 today. The risk and reward we spoke about over the weekend really didn't justify a breakout type of trade up to this resistance level, and rightly slow. Sit tight on this stock. Again, it's really been a low trading type of volume over the past 2 or 3 weeks. I mean, I myself, I haven't really placed all too many trades. This week, I haven't placed a single trade. So if you find yourself not placing trades at this particular moment in time, it's rightly so. Again, the markets haven't broken out. We don't have conviction one way or another. We're still stagnant, and we have been stagnant really for the past 3 or 4 weeks. Markets are really mixed at the moment. They're bifurcated, they're confused. There's no real commitment one side or another, and it sounds like a broken record, but I have to keep painting this picture to you so you don't get, carried away by this most recent optimism, albeit a very small move of about 150, 160 points over the past 4 trading sessions on the Dow Jones Industrial Average. It's not the right time right now to be buying. We have no confirmation, we have no clarification of higher highs yet. We're still making actually lower highs. Look at this right here, and relative lows. So I mean, until we get a breakout above these levels or a breakdown below these levels, you should really be sitting tight on individual trade setups. Now, I've gone for a little bit longer than what I would have liked to have spoken as at this Thursday afternoon. So what I'll do, I'll end the discussion here. If you want to get in contact with me, email me success@pivotpoint-trading.com. Other than that, I'll see you over the weekend in that pro analysis recording. Maybe we'll have, or I'm sure we will, I should say, have better trade setups. I was really excited to begin this week on the downside break. It hasn't happened, but there's always the possibility, there's always the chance that, we've just put it on hold for 4 or 5 trading sessions and it will materialize next week. It's only a matter of time until we get the break. Again, it doesn't bother me which direction. I'm completely neutral, just waiting for better market confirmation. I'll speak more about this over the weekend. Until then, have a safe Thursday evening. Have a great session of trading on Friday. If you are some form of an day trader or an intraday trader, if you're not, be happy to sit on the sidelines and have no positions open and just wait for better clarification. All the best traders around the world. Have a fantastic evening. Goodbye.